use the moving averages to find buy levels. First, you want a previous downtrend. You can see that the market created lower highs on the way down as well as lower lows. So long as the trend is down, we don't take the moving average crossovers. Here we have a crossover that almost ran, and then the trend continued down. The reason you would not trade this 821 crossover as well as 21 cross 50 is because it did not break this resistance shelf. As we move down, we see it forms another lower low. Here we have the 821 crossover, 21 crosses above 50. Once it breaks a previous resistance shelf, you want to enter your position long, which would be over here. And your stop loss would be at the swing low. This is why it is important to have a smaller position, a position that allows you to take those long stop losses. And here we can see a rising window. Market moved up, it gapped, came back down to find support on the 8 moving average, and the market continued running up. All of the positions we take is so that we can have long positions only. We only take long positions because in the short term markets fall and markets rise longer than they fall, as we can see in this weekly chart. The markets have been rising for a very long time, and here you can see an 8 crossover 50 as well as a 21 crossover the 50. Once the long-term trend has changed, you want to look at the daily. And here we have the daily. You can see this is the 2020 crash from COVID. And the market continued up. We can see the 8 crossing the 21 and the 21 crossing the 50, and the market just ran. You do not want to exit the trade until it hits your stop loss. And here we can see that it never did. Once again, the market had a downtrend. You can see that it made multiple shelves of resistance. When the trend changes, you want to wait until it breaks that resistance shelf, and you want to put your stop loss on a previous support level. You can either have it here, or you can put your stop all the way to the previous low. And so long as your position size can handle that stop loss, you want to remain in the market for as long as possible. We can see that the support level was never reached. As we move on, we can see that the support level was never hit. Let's put in a trend line. And as you can see, that support level hasn't been hit. Here we have a new 821 crossover. 21 crosses the 50 after a previous downtrend. You wanted to break the last resistance shelf, and that's what it did over there. You want your stop loss to be on the swing low once again. Now we have 2 long positions, and the market has reached new highs on the Aussie. So you can see that this crossover, we made a long run. The market came down, you would threaten to exit that position. However, because we trade according to the system, you never exit the trade until it hits your stop loss. Rising windows are indications of continuation patterns to the upside, and a falling window usually indicates momentum to the downside. As you can see, there were a few gaps here. So long as the markets do not reach your stop loss, very important, you want to stay in your position. What you can do is you can make trailing stops. So what you would do is you trail your stop according to every swing low. Every time it breaks a resistance shelf, you want to wait until that resistance shelf was broken, and then you want to enter your new trades long. So you could have had multiple positions long, so long as the 50 moving average has support. Here we can see it made a downtrend. You would have taken those profits, and then here you would enter your new trade. Higher lows, higher highs, breaks that resistance shelf, entry long. Thank you for watching the video. Trade safe. Have a good day.